Welcome to the deep dive. Today, we're going to unpack the state of the cryptocurrency market in 2025. Sort of look at where things stand and maybe where they're headed.
Yeah, and we've got some interesting sources to guide us. We'll be looking at a pretty comprehensive trends report and also getting into the specifics of a new gaming token, B3.
Right. So think of this as your guide to understanding the key crypto movements right now. We'll try not to make it too overwhelming.
Exactly. We've got a good mix. First, there's this 2025 trends report from builder.io. It's pretty extensive, surveyed over 7,000 people in the US, UK, Europe, Singapore, Australia.
Wow. Okay. So that gives us the big picture.
Covers crypto ownership, the effects of U.S. policy, Memecoins, which are surprisingly significant, ETFs, investor sentiment, all that good stuff, from March and April this year.
Okay. And then for the specific token, B3.
Yeah, for B3, we've pulled analysis from Botsfolio and CoinCodex. They've got predictions, bullish, bearish scenarios, price targets, some technical analysis too.
It gets into the nitty-gritty.
Right. And finally, there's a piece from Famex called B3 Base Crypto, revolutionizing gaming on the Base blockchain. That one looks at its launch, the tech market reaction.
So it ties those bigger trends to a real-world project.
Precisely. It's a great case study.
All right, let's dive in then. Starting broad global crypto ownership, what really jumped out at you from the builder.io data?
Well, the main thing is just the consistent rise. Compared to 2024, ownership is up across all the regions they looked at.
Really? Everywhere?
Yeah. The UK actually showed the biggest jump, went from 18% last year to 24% in 2025.
That's quite a leap.
It is. The US is up too, just slightly, to 22% from 21%. And Singapore, they still have the highest rate overall, sitting at 28%.
That UK growth is interesting. The report mentions Europe's regulatory environment warming up, specifically MiCA. Do you think that's playing a big role there? And maybe in France too?
I think it's definitely plausible, yeah. MiCA, the Markets and Crypto Assets Framework, is meant to bring consistency, right? Create a clearer legal footing.
So less uncertainty for potential investors.
Exactly. That kind of regulatory clarity probably reduces the perceived risk, makes people in the UK, France feel a bit more comfortable getting involved. And France did see a notable rise as well.
Okay, let's talk policy impact. The report brings up the Trump administration's pro-crypto stance, specifically mentioning the strategic Bitcoin reserve. Did that move the needle?
It seems like it did, yeah. According to the report, almost a quarter, 23% of non-owners in the U.S. said that specific initiative made them feel more confident about crypto.
Just in the U.S., or?
No, that's the interesting part. It wasn't just a U.S. thing. You saw similar bumps in confidence among non-owners in the U.K., about 21%, and Singapore, 19%.
Huh. So even a symbolic government move can have international ripple effects on sentiment.
It appears so. Broader policies supporting digital assets, a clearer framework, it all contributes.
Now, this next bit I found fascinating. Memecoins. The report calls them an on-ramp to crypto. I mean, really.
I know, it sounds counterintuitive, right? But the data is pretty compelling. Globally, something like 94% of people who own meme coins also own other types of crypto.
Wow, okay.
And get this. In the US, 31% of investors who hold both actually bought meme coins before they touched Bitcoin or Ethereum or anything else.
Seriously. So they start with Doge or Shiba Inu and then move to the quote-unquote serious stuff.
Apparently so. Australia and the UK show similar trends, around 30% and 28% respectively. It suggests these often more lighthearted tokens can actually lower the initial intimidation factor.
Makes sense, I guess. Less serious, maybe feels like less risk to dip a toe in.
Could be. And France, they're way ahead on meme coin adoption. 67% of their crypto investors own them.
67%. Why so high in France, do you think? The report doesn't say.
No, it doesn't give a specific reason. We can speculate. Maybe it's a cultural thing. More openness to novel digital trends? Or maybe something about their early regulatory approach? It's definitely an outlier.
Food for thought. Okay, shifting gears slightly. Spot crypto ETFs, big topic over the last year or so. How are they reflected in the 2025 data? And just quickly remind us what a spot ETF is.
Sure. A spot ETF is basically a fund traded on a stock exchange, like any other ETF, but it directly holds the actual cryptocurrency, like Bitcoin, not futures contracts, the real thing.
Got it. So how popular are they now?
Well, the report shows investment in them is definitely rising among people who already own crypto. In the US, it climbed to 39% this year.
Okay.
But Italy is actually leading the pack among the surveyed countries. 47% of Italian crypto owners are using ETFs. Then UK at 41%, Singapore 40%, Australia 38%, France is lower at 32%.
So it's becoming a more common way to get exposure alongside directly buying.
Seems that way. The U.S. data breakdown is interesting too. 61% of U.S. crypto holders primarily use an exchange wallet. The 14% hold their crypto only through an ETF.
Only through an ETF. Wow.
Yeah, and then another 25% use both exchange wallets and ETFs.
So it shows people are diversifying how they hold crypto, not just what crypto they hold.
Exactly. For some, maybe the ETF route feels more familiar, fits into their existing brokerage account. Others want that direct control you get with a wallet.
Another point the report makes is about crypto as a store of value. It says selling activity was slower in 2025 compared to 2024. What does that suggest?
It suggests a potential shift in perception, I think. Moving beyond seeing crypto purely as a risk-on asset you trade for quick gains.
More of a longer-term hold mentality creeping in.
Potentially, yeah. And the report notes the U.S. is leading in viewing crypto as an inflation hedge. That number went up from 32% last year to 39% this year.
Okay, that's a significant jump. Suggests a maturing view for at least some segment of the market.
I think so. It implies a longer-term strategy is developing for more holders.
And quickly on demographics, anything major changing there?
Two key things. One, the gender gap seems to be closing in most countries surveyed. More women are getting into crypto globally.
That's good to see.
Yeah, definitely. And two, adoption among younger generations is really strong. About half of millennials and Gen Z globally either own crypto now or have owned it in the past.
So it's really becoming part of their financial landscape. Okay, that's a great overview of the macro trends. Let's zoom in now on this B3 gaming token. You mentioned it's built on the Base blockchain. Tell us more.
Right. So B3, according to the Memecoins report, positions itself as a layer 3 gaming network. Now, Base itself is a layer 2, built on Ethereum by Coinbase to be faster and cheaper.
Okay, layer 2 on Ethereum.
Yeah. B3 goes a step further. It builds the third layer, specifically optimized for gaming on top of Base. The goal is even more speed, even lower costs for game stuff. They talk about supporting game chains.
Game chains, like dedicated chains for specific games.
Kind of. Think of them as specialized, high-performance blockchains designed just for the demands of blockchain games. And apparently, B3 is already hosting around 80 games and claims over 6 million players.
80 games, 6 million players. That's actually pretty substantial for something relatively new. It launched in February this year, right?
That's right. And the launch definitely made waves. Memecoins highlights a massive price surge over 118% right after it got listed on Coinbase and Bybit. Yeah, and trading volumes were huge, over $140 million on Bybit alone at one point. Social media buzz was intense too. It was briefly the third most talked about crypto on StockTwits.
Beating out Ethereum and Dogecoin.
For a short time, yeah. Pretty remarkable.
What's driving that hype? The report mentions it was developed by former Coinbase engineer.
That definitely seems to be part of the narrative, yeah. It adds a layer of credibility, maybe. Fuels speculation about its potential and, connections.
But the analysis isn't all hype, right? Memecoins mentioned caution.
Oh, absolutely.
Yeah.
They explicitly draw parallels to other gaming tokens that had huge pumps after launch and then, significant drops.
Right, the classic pump and dump scenario worry.
Exactly. It serves as a reminder, Initial excitement is one thing, but long-term success depends on actual utility, adoption, sustained development. Sustainability is the big question.
So speaking of price action, let's get into those predictions. Botsfolio gave both bullish and bearish takes on B3. What's the optimistic case?
Their bullish view hinges on a few things. Wider adoption, maybe through partnerships in gaming or even beyond. Tech improvements, making it faster or cheaper, attracting big institutional money, and just the overall crypto market growing.
And if all that happens price-wise?
In that scenario, they see potential prices anywhere from 0.02 cents up to 0.35 cents over the next 1 to 5 years.
Okay, quite a range. And the flip side, the bearish case.
The bearish outlook focuses on the risks, things like tougher regulations hitting the project or Base itself, strong competition from other gaming or layer 3 solutions, the project just failing to get real traction and usage, or, a general crypto market crash.
Makes sense. And the price prediction there?
Much lower, obviously. In that scenario, they forecast prices could drop down to the 0.000005 to 0.005 range, again, over 1 to 5 years.
Oof. That's a stark difference. What about CoinCodex? Their view seemed a bit different, maybe more short-term focused.
Yeah, CoinCodex seemed more cautious in the immediate term. Their forecast, looking just out to June 2025, actually predicted a drop down to around 0.00338.
But their sentiment indicators were mixed.
Right. Their overall technical sentiment was neutral when they published, but interestingly, the Fear and Greed Index for B3 was showing greed.
Which can sometimes mean a correction is coming.
Exactly. It can indicate the market might be overheated in the short term.
But CoinCodex wasn't entirely bearish long term.
No, their longer-term models painted a more optimistic picture. They suggested a potential recovery and climb, maybe reaching around 0.1019 by 2029 and 0.015 or so by 2030.
Okay, so it really highlights how varied these predictions can be depending on the time frame and the model. Lots of uncertainty, especially with new tokens.
Absolutely. It's forecasting in a very volatile space.
The Fame X piece also had some expert takes on B3 specifically. What were their main points?
Generally, the experts seem to agree that the Layer 3 approach is potentially a big deal for gaming on Base, a game changer, as one put it.
Okay.
They saw the high trading volumes as a clear sign of strong initial market interest, but they consistently hammered home the volatility point.
Urging caution.
Right. Warning investors that this is a new, risky project. And they also flagged regulatory factors around Base itself as something important to keep an eye on.
Okay. So we have these predictions, these expert views. It makes you think about how people even try to predict crypto prices. We did have that survey paper in our sources. Maybe touch on that briefly.
Yeah, cryptocurrency price prediction algorithms, a survey.
Okay.
It gives a good overview. It talks about the kinds of data predictors use things like historical price, volume, obviously, but also technical indicators from charts, data pulled directly from the blockchain, even social media sentiment.
Right, trying to quantify the buzz.
Exactly. And the methods have really evolved. Started with simpler statistical models, then moved into machine learning, random forests, SVMs, and now deep learning is huge. RNNs, LSTMs, trying to find complex patterns in all that data.
And the paper suggested even fancier hybrid models might be the next step.
That's what it indicates, yeah. Combining different AI approaches, like Conv-LSTM or LSTM-GRU, to try and capture those really complex, time-dependent patterns in crypto prices more effectively. They also mentioned transformer models, the type used in AI language models, showing promise.
Interesting. But the survey also highlighted some gaps, right? Like, do these predictions actually make money?
That's a really critical point they raised. A lot of research focuses on just predicting the price accurately based on past data, but the paper argues there needs to be more focus on predictability in a real-world trading sense.
Meaning, can you actually use the prediction fast enough and accurately enough to make a profitable trade after accounting for fees and slippage?
Precisely. And also things like usability. Can regular traders even use these complex models? And regulatory compliance. Those practical aspects are often under-researched.
Okay, so wrapping things up, we've seen a pretty clear picture of increasing crypto adoption globally in 2025. Europe's growth is notable, maybe helped by clearer regulations.
Right, and we saw the surprising influence of things like U.S. policy shifts and even meme coins acting as this unexpected gateway for new users. ETFs are growing steadily too.
And there's that subtle shift maybe towards viewing crypto as potentially more than just a quick trade, possibly a store of value or inflation hedge for some.
Then we dove into B3, a specific example showing that huge initial excitement, the retail buzz, but also the inherent volatility and the big questions around long-term utility versus just hype.
Yeah, and the wildly different price predictions really underscore that uncertainty.
Absolutely. And finally, we touched on just how complex predicting these prices is, moving from basic charts to really advanced AI, but still facing challenges in making those predictions practically useful.
Which brings us to a final thought for you, the listener. We've talked a lot about price, adoption trends, technology, but thinking longer term, beyond just price, what factors do you believe are truly crucial for the lasting success and widespread use of digital assets like crypto or specific projects like B3?
Yeah. What other questions does this raise for you about that interplay between the tech itself, the market forces swirling around it, and ultimately how people actually end up using it? Something to think about.